It's April 7th, 2020, and people have been asking me, Eric, what is going on in this real estate market? So I wanted to put together this video and just share. This is everything that I know from today, but it could all change in a snap of your fingers by tomorrow. So let's just dive into this and I'll show you what I got for you. Again, April 7th, 2020, and things change every single day. So this is where we're going right now, all right? Hang on. So we're going to look at the historic market and today's market. By going on the Cromford Index, you're going to see right here on the line, it is balanced. That's at 100. That is the Cromford Market Index for a balanced market. When it is above, it's a seller's market, and when it's below, it's a buyer's market. So back in 2005 to 2006, there was it was all the banks. You could get a subprime mortgage, which is basically a loan without docs. And as you can see, the market was going absolutely crazy. See how it's that big vertical spike up, and then all of a sudden it crashed once all that came. And since then, during this economic recovery period, it's somewhat been on a gradual shift up. So this is where we're supposed to be. We are still on track. I gotta move me. Today, again, we're still well above 100, so it's still a seller's market. We know it is this. We have evidence because the investors are still spamming you on your cell phones and emails wanting to buy your house. You're still getting letters in the mail, so they still want to buy. The demand is still above the supply in this market, which is not the case in a buyer's market. If it was a buyer's market, you would not be getting these phone calls from all these investors. Interest rates, they are still in the threes. So it's still a great time to buy. Back in the day, they were in the fours and above. So if you're looking to buy, you have great interest rate. It's as close as free money as we've gotten in a very long time. Here it is. We are at this very short term where you can see my chart is just shifting. I'm going to move me over here. As you can see, we're still well above 100, still a seller's market. On March 16th or 19th, we actually peaked at 241, which is extremely high. It's the highest it's been in a long time. We're well above 200. Again, it's a seller's market. And this was just a quick briefing of, hey, we are declining, which is all right for the seller's market. It's still good. I'm excited about this next slide that's coming up. Bam! We are getting inventory again. So if you're a buyer, which I work with a bunch of them, now you're getting more homes to pick and choose from. In the past, we'll say a few weeks ago, if you wanted a house, you had to rush there, hurry up, submit an offer. You're dealing with multiple offers. Well, now you get more inventory coming on. People are a little nervous about this virus going on and what is happening. So guess what? As a buyer, you're going to have a little bit more room to negotiate and also more properties to pick and choose from. So that's absolutely wonderful. And the cool thing is we are looking at this is probably just going to be a short time thing. And I'll show you that later on from the experts. What is different from, back when we had the housing bubble? Back in the housing bubble, it was really easy to get loans. Not today. We are very tight. The lending industry is very tight. So therefore, it is challenging for you to get a loan. If you are well qualified, you're still going to get a loan. So even the sellers out there, if you're getting offers, you're usually getting offers from a well-qualified buyer. Back in the day with the bubble, there was the price appreciation. They were going through the roof. 8, 12, 14s, which is crazy. In the last 6 years, they were the highest about 6. So homes were appreciating, but they definitely weren't appreciating as fast as they were in the past. So this time it is different. Inventory. Back then we had tons of inventory. Builders were going crazy. Now we have a shortage of homes, but homes are coming. So this is what I was excited about, but it is still a seller's market. The median income that was needed back then in the bubble, you only needed a small percentage to buy because they're loan docs. Now you still have to be well qualified. Again, home equity cashed out. In the past, people, they had so much home equity that they cash out was like 263 billion, 321 billion. Not now. It's only like 87 billion. People are hanging on to their home equity, which is fantastic. The future, and this is where we're going. This is from healthdata.org. My wife showed this to me this morning. I was pretty excited, so I had to share. Here it is. If we're looking at this big pandemic, it's going to be peaking in, you'd say, middle of this month to late month. I guess it's approaching that. But then here it is, June 1st. There's a good chance this is going to be minimized and back to a normal, basically back to normal life. Fingers crossed for that. Major financial institutions are looking for a really quick, rapid growth. They think it's just going to decline to the second quarter at the end of it, and then all of a sudden spike right back up once things get going again. PricewaterhouseCoopers surveyed the 50 leaders, cross-section of industries, think they can recover in less than a month, but 90% say they can recover in 1 to 3 months, which is awesome. So you see, this is probably going to be a short-term thing that we're dealing with. On top of this, 53.8% of all Americans have at least 50% equity in their home. This means very low chance of REOs, getting them back, foreclosures. People can still sell and take cash out of their equity. So that is absolutely fantastic, and this is what I wanted to share. So we're still in a good market, and we should continue to be in one. Fox News just posted this today. I don't like Fox News. I can't stand them, but it just popped up on my feed, and I just had to share it. Real estate boom. Once coronavirus threat is gone, go ahead, put your house on the market. So they're expecting it for it to be a really fast and speedy recovery. So that's what I have. Tell me what your thoughts are, what your concerns are. I'm looking at this as just a quick temporary slowdown in the market. Things are still good, but as soon as it's over, bam, things are going to go right back to normal really fast. And hopefully we'll have more inventory of homes here in Phoenix, because recently there has been no homes. It is very frustrating. So stay home, stay safe, keep doing what you're doing. If you have any questions, you want to see more videos, and if you want to know more about the market, please reach out to me. Thank you very much.